Insurance professionals work hard every day to keep people safe, but as technology transforms the industry, how can insurers protect not only their clients, but also shield themselves from ever-changing cyber risks? My name's Elizabeth Blossfield, and I'm the host of the Insuring Cyber Podcast, a monthly look into how the world of cyber and the business of insurance are connected. Hi, everybody, and welcome back to the Insuring Cyber Podcast. For our first episode of 2026, I spoke with Beazley's head of U.S. Cyber, Melissa Carmichael, about the mounting pressures shaping the cyber insurance market this year. This includes low pricing, rising ransomware severity, and the growing influence of AI. Melissa discussed AI's dual role, empowering attackers while also strengthening defensive capabilities, and emerging risks tied to data centers and board-level accountability. Check out what she had to say. Hi, Melissa. It's great to be speaking with you today. How are you doing?
I'm doing well, Elizabeth. Thank you. It's nice to be here.
Yeah, it's really nice to have you. I'm looking forward to this conversation. I know you have a lot of expertise in this area, and Beazley at the beginning of the year put out their predictions for 2026. So I'm excited to dive into some of these. And I guess just to start off, sort of a big picture question, but from your vantage point at Beazley, how is some of the low pricing in the cyber market starting to test profitability? And what else do you expect to see this year in cyber insurance?
Yeah, no, it's a great question. And I think one that we've been talking a lot about throughout 2025. But the market is definitely challenging, to say the least. And we're certainly seeing that ransomware is not going away. These events are also increasingly severe, as we saw with the cyber attack on Jaguar Land Rover last summer, which led to a 0.2% reduction in the UK's GDP in September. And, despite this backdrop of increased claims and severity, we remain fully committed to cyber. But where conditions are unsustainable in terms of pricing, as we're seeing in the US, we're holding firm on rates rather than really chasing the market down. And striking a balance to find the right market pricing stability is really important and can be a challenge. The way we've been approaching it at Beazley is really focusing on broadening our coverage to support our insured's needs. But obviously, broadening the coverage also comes with more claims activity. So we just need to make sure that we're, adequately pricing that exposure to support a long-term sustainable market. And, we continue to fine tune our pricing, not only to take into account the long-term trends in cyber, but also the risk characteristics in the claims. And having been a market leader for the last 20 years in cyber, we have plenty of data around claims that really help shape our thinking around, what does adequate pricing mean in this market?
Yeah, that's great. And obviously, you've been doing this for a long time. You have a lot of expertise in cyber insurance, and data is so important. And another part of the conversation we've been hearing more and more is artificial intelligence. And I've been hearing about AI-related exclusions being added to cyber policies as well. So I was curious what your perspective is on that, and how should insurers be sort of striking a balance between managing some of the uncertainty with AI risk and still providing, meaningful cyber coverage?
Yeah, no, it's a great question and top of mind, I think, for many of us, not just those of us in the cyber industry, but we're continuing to watch the developments very closely and in real time. We're seeing both state and local governments becoming more active in taking on privacy and AI issues. State AGs recently indicating that they're going to be targeting AI chatbots in 2026. We're also seeing a number of intellectual property issues around copyright, defamation. Beazley's approach to date is really more focused around affirming coverage and not actually excluding coverage. We prefer to underwrite to the risk and understand the exposure. With that said, that could mean that some risks are more difficult to insure until better guardrails are in place around the use of AI tools. But it's definitely an area we are continuing to watch very closely.
Yeah, absolutely. I think everyone would echo those thoughts as well. I think we're all sort of watching to see what happens next with AI. And I know, as I mentioned at the beginning, Beazley put out some predictions for 2026. And I wanted to talk about some of those because I know your 2026 outlook highlights how AI is sort of supercharging ransomware and cyber attacks, which is another risk area. So how is AI changing attacker behavior? And are there certain risks that underwriters are most concerned about with AI?
Yeah, I mean, I would say that, we anticipate that hackers will increasingly use AI to enhance their capacity for automating attacks, including ransomware attacks. And we really saw that throughout 2025 and expect more of that to come in 2026. But honestly, ransomware attacks have been steadily increasing in efficiency and effectiveness for the past decade. So it's something that we are continuously monitoring and preparing for. But because the attackers will be using AI tools to identify vulnerabilities, it's also all the more reason for the good guys, our policyholders, to use AI tools to do the same with the goal of preventing an attack before it happens. So we're seeing AI on both sides of the fence, if you will, and certainly seeing many use cases for AI in protecting against the threat of ransomware.
Yeah, that makes sense. We talk a lot about the risks with AI, but there are a lot of opportunities for protection against the risks as well. And the other thing that I thought was really interesting in your predictions was that you talked about resistance to AI sort of spilling from the digital world into the physical one, especially around data centers, which I thought was an interesting piece of it as well. So can you talk about that and some of the risks there?
Yeah, sure. I would love to. I think there's a lot of talk in the market around data centers. I think a lot of that talk to date has been focused around builders' risk and property and environmental exposures, and maybe a bit of cyber on the fringes. But I think the real critical element here is understanding the physical exposure that can come from a cyber incident, and that's something that we've been focusing on. How do we bridge that gap that is within property policies? Property policies, for the most part, are very limited in terms of what they will cover for a malicious cyber attack. In many cases, it's a small supplement that's available under a property policy for a malicious act. So how can cyber insurance and cyber products help bridge that gap, especially for data centers where there's a tremendous amount of value in these very, very large hyperscaler data centers? So it's something that I think for many of us in the industry will hopefully be an area of growth and sort of new buyers, if you will, into cyber.
Yeah, that makes sense. Another one of those opportunity areas. And speaking of gaps, another gap in the industry that I've been hearing a lot about is just the gap between those that succeed implementing, digital transformation and those that sort of fall behind. And I was curious what differentiates companies that can survive a major cyber attack that have, sort of those digital capabilities built in from those that will suffer long-term or maybe even irreversible damage. And how should companies and their insurers be sort of preparing themselves?
Yeah, no, it's a great question. And I think, larger corporations with healthy balance sheets, have a clear advantage in mitigating and managing some of that risk. But smaller and middle market entities, must rely on cyber resiliency even more so. And the entities that we find that engage with us and with their carrier partners to understand the threat environment are the ones that are focused on risk management, will be best suited for large cyber outage. And preparation is really key. So those companies that are prepared and are far better suited to make it through an outage with minimal impact. Those companies that really test their plans, via attack simulations and tabletop exercises, or even those that have a history of similar incidents, can all set up organizations for resilience in the face of a cyber outage.
That's an important point. And, speaking of resilience, obviously cyber attacks can affect the entirety of an organization all the way from lower level employees all the way up to executives and, at the board level. And there's been a lot of increased discussion about long tail D&O exposure following cyber incidents, especially when boards are seen as, underprepared or underinsured. So are you seeing this, or do you expect to see any changes at the board level? And what can boards be doing now to sort of prepare for cyber incidents this year?
Yeah, absolutely. And I think, the financial and operational impacts of cyber incidents are well documented. But what's often overlooked is the reputational and the legal exposure faced by boards when their organizations are underprepared or underinsured for such events, and their shareholders begin demanding answers. So I think we saw this with some of the ransomware attacks that happened in the UK and the retail industry in the spring and summer of last year, as well as the Jaguar Land Rover matter that I mentioned previously. But the recent surge in these high-profile cyber attacks is definitely getting the attention of the boards. And, it's something that, I think if a board, failed to prioritize cybersecurity or neglected to secure adequate cyber insurance, as we saw in some of those cases, the reputational damage can be swift and severe. And courts are increasingly willing to examine whether boards had adequate cyber risk oversight. There's been a clear uptick in cybersecurity related D&O claims, particularly when companies suffer significant financial losses or regulatory penalties following a breach. And many boards assume that their general liability or their D&O policies will cover cyber-related claims. However, these policies often exclude or limit coverage for cyber events, leading, a potentially dangerous gap for the boards.
Yeah, absolutely. Another thing to watch closely, obviously there are a lot of risks. We talked about at the beginning that it's a challenging market, but there are also some opportunities. And I know that Beazley's outlook emphasized that insurance needs to move beyond just being a safety net to being a strategic enabler. And I was wondering if you could talk about what that looks like and how insurers should be sort of rethinking their role as they're working with insureds this year.
Yeah, absolutely. And I think, Beazley is focused on a full spectrum approach to cyber, as we like to call it. And look, it starts with coverage, and you obviously need coverage to address the exposures, but it goes well beyond the policy wording. And a strong focus on risk management can help prevent or even mitigate significant losses. And leveraging our claims data, as I mentioned before, to understand the threat landscape now, and also understand where threat activity may be going in the future. And this allows us to work directly with insureds to focus on key controls and best practices to prepare for and prevent the threat activity. Helping insureds understand is not just about having a plan, but as I mentioned before, you also need to test the plan, right? Via tax simulations and tabletop exercises. And, before, during, and after, full spectrum cyber solution combining cybersecurity, insurance, and claims and incident response. It's a highly effective in helping businesses go from panic to preparation.
Yeah, that's great advice. And that preparation is key. And this has been a really helpful conversation, sort of understanding what's going on in the cyber market this year and what insurers should be preparing for. So thank you so much for taking the time today.
Absolutely. It's my pleasure.
Well, that's it for this episode. Thanks to Melissa for taking the time to speak with me and to all of you who tuned in. You can find this and previous episodes of the Insuring Cyber Podcast at insurancejournal.tv or wherever you get your podcasts. Feel free to reach out to me at eblossfield@wellsmedia.com with any questions or comments. And stay tuned for our next episode in March. Talk to you next time.